Hey guys, welcome back to another video. My name is Josh, and in today's video I'll be providing a portfolio update for the month of December 2020. I'll also talk about Infratil, which is a stock within the portfolio, some of the news that has happened in the past month, so in December 2020, as well as talk about briefly my strategy for investing in 2021 for this public portfolio. So if you enjoyed today's video, be sure to hit like and subscribe. And as always, this is not financial advice, purely for entertainment purposes only. None of the stocks that I talk about in here are recommendations to buy, sell, hold any of these stocks. You can read the full disclaimer down below. So without further ado, let's get right into the portfolio. So here we are. This is the Sharesies public portfolio. And if you're new to this channel, essentially I started this portfolio at the end of July 2019. I started out with $1,000 in the portfolio, and subsequently over time I've contributed to this portfolio, and now over a year and maybe 4 or 5 months, the portfolio is now sitting at $12,609.15. I am currently recording this at market open, so it's now 10:15 a.m. on the 5th of January. So in a few minutes, this might change the portfolio value depending on when Sharesies actually update their numbers, okay? But for now, this is based on December 31st closing values, and the portfolio is sitting at $12,609, representing a return of 22.71%. That is a total return of $2,348. Now you can see this is the change since the beginning of the year. The 6th of Jan 2020, the portfolio was at $2,483. Currently, the portfolio is up $2,348 and 22%. So portfolio is done well. It has certainly met my expectations. Just to be clear, the returns will drop over time as I contribute more money towards this portfolio, because if you think about it, if you have 100% return and then you add in some more money, that 100% wouldn't be correct anymore. It will be less than that because you've diluted those gains, right? So likewise, this return would actually be much higher if I had stopped contributing to this portfolio. But as you know, every week I deposit in $70 towards this portfolio. Anyone that uses the referral link to Sharesies, I will get $5, and that gets plowed back into the portfolio. All the dividends get reinvested, and for every 100 subs on this channel I also add $100 into the portfolio. So this channel has grown quite significantly. Thank you all for joining me in 2020. I really appreciate all the support that I can get. And so everything does go back into the portfolio. All right, so I've done enough talking. Let's take a look at what stocks I have within this portfolio. Now, first stock we have is Argosy Property, which is up 39% since I started this position. Auckland International Airport up 34%. Heartland Group Holdings finally recovered quite well in the past month, 26.18%. Infratil, which I'll talk about this stock later on. Very interesting developments in the past month or so. Up 32%. Main Freight, this is our top performer, 49% up. NZX is also up 36%. Oceania Healthcare, one of the newer additions to this portfolio. I think I initiated the position in November. It is currently up 5.46%. So that's recovered since the past month. And I'll show you the movements within the past month as well, so you can see it clearer how far it has swung in terms of its returns. ASX 200, this is a position that I've started contributing to gain exposure on the ASX. The Australian Midcap Fund is the position that I've stopped contributing. And that's why you can see that the return is actually higher than compared to the other ETFs as well. So for Emerging Markets Fund, it is 9.16%. The US 500 fund is 8%, but the Australian Midcap Fund is 29.28% up. So the reason being is I've stopped contributing to that fund, and so the returns aren't diluted, and it is what it is, right? Same with the NZ Top 50 fund. I've just left this in there to sort of have a proxy for how the market has moved. It's been interesting to see that the portfolio is actually tracking really closely to that 22.9% return the NZ Top 50 fund has returned, right? So the portfolio is up 22.71%. Top 50 fund is up 22.9%. So portfolio is tracking very similar to the NZX50 fund. There is a slight underperformance, but as I mentioned before, as I continue to add money into this portfolio, the returns will get diluted. So going forward, I'm not sure how I can actually compare myself to the market, just because of how complex the calculation can become, because I'm not contributing the same amount of money every week. So it's not just a linear average. So I think going forward, I won't really compare how I've performed against the NZX50 fund that I have within this portfolio, just because I expect the returns to diverge quite a bit as I continue to contribute more into the portfolio. That's it for Sharesies, and also just to be clear, I do have $80 to invest. That came in on Monday, but Monday was a public holiday, so I will invest that money after I've recorded this video. And here we are, this is the Sharesies spreadsheet where I compare the movements within the portfolio compared to the previous month. So as you can see here, Oceania Healthcare 16.2% allocation, and the Oceania position is up 5.46% compared to last month when it was down 5%. So Oceania Healthcare has recovered quite nicely in the past month. Heartland Group Holdings now is up allocation wise 1.4%. The reason being is that the share price has increased so much as well. Its ending value at the end of December is $1.66, whereas in the previous portfolio update it was only $1.45. So it's not because I've added a whole lot into Heartland Bank, it's just because the shares have increased in price quite a bit. Now, diversified ETFs, I have been trying to reduce my position more and more over time, so this is expected because I wanted to focus more on individual stocks. So I've mentioned this in previous portfolio updates. Nothing unusual here in my opinion. Infratil, this is the stock that I wanted to talk about, and I'll talk about this stock after I finish this portfolio review. And this position is up 1.8%, and that is because as well, a huge increase in the price. So Infratil was $5.95 at the end of November, and now December it closed at $7.30. So the Infratil position is already up 32.8% since I started this position a month ago, which is quite incredible, right? The other stocks, NZX, GoSee, Auckland International Airport, didn't really move much. Mainfreight was another big increase of 1.5%. Reason being as well, share price has increased. It's currently at $69.50. In the previous update, it was at $62.39. And the dividends received over here has increased as well. It's currently sitting at $99.41 throughout the lifetime of the portfolio. In the previous month, it was only $78.14. So to round up 2020, I think the portfolio has done really well. It's beaten my expectations really. As we've seen during the Rona situation back in March, this portfolio was down quite a big amount. And you can go back to look at previous portfolio updates to see what happened to the portfolio. So this portfolio has recovered really nicely, and I am going to continue contributing to this portfolio. Now, let's talk about Infratil for a moment. Infratil is up quite a significant amount, and the reason being is because they did receive a takeover offer from the Australian Super Fund. How it works is that they were going to offer a cash consideration of $4.69, as well as a distribution of Trustpower Limited shares. Somehow the Aussie Super doesn't want Trustpower, so they're like, all right, we'll give you the Trustpower shares back and cash for the remaining Infratil portfolio. So that first implied a value of $6.40, and then subsequently they did revise their cash consideration from $4.69 to $5.79. So that's a huge increase of $1.10 in cash consideration, and that's when the offer implied was at $7.43 per share. Obviously, after the announcement, the share price has gone up from roughly $6 it was trading at before, up around 20%. And you can see today the value has gone up again, and I'll talk about this later on. So Infratil is just on fire at the moment. What does the management team think? So CEO Marco believes that both proposals were unsolicited and materially undervalues our significant renewable energy and digital infrastructure platforms. We expect some of the additional value to be demonstrated in the near term with the recently announced strategic review of Tilt Renewables, which will continue an ongoing appreciation of the value of CDC data centers. Today, market open, they did announce that the value of the CDC data centers have been revalued up quite significantly. So as you can see here, Infratil advises that the independent valuation of the CDC data centers as at 31st December 2020 indicates a significant increase in value, now valued at the bottom range, roughly 2 billion, up from the bottom range of 1.6 billion. Okay, so that is an increase of roughly 400 million in the span of 1 quarter. Okay, so they did the last valuation at 30th September 2020. In the past 3 months, the value has increased already by $400 million. The management team already knew that was going to happen, right? Because obviously management team is involved in the day-to-day operations of the business. They know what the value of these assets will be, and they will know that this type of assets will be revalued at the end of the quarter, and they were probably expecting a big revaluation increase. So at the time, the offer did seem quite high. It was a 20% premium on the share price that Infratil was trading at. But subsequently, with hindsight, we can see that management was right. The CDC data centers were going to get revalued quite significantly by $400 million. Another thing to note as well, Tilt Renewables, which is also another asset within the Infratil portfolio, has increased quite significantly in the past month. So the share price has gone up roughly 40% in the past month. $4.55, now it's trading at roughly $6.30. So that is a huge increase as well. And personally, I think management is right. I think this portfolio was significantly undervalued in the past month or so. Just in 1 month, in the span of 1 month, you see a lot of their assets already revalued upwards. Very interesting development within this stock. It's a little bit of an unusual situation in my opinion, because Infratil is run by another management team, Morrison & Co. They charge the shareholders fees for running that portfolio, and this is quite a big portfolio. So I don't know if the overseas investment office will allow this type of transaction to happen, because Infratil owns a lot of assets within New Zealand. They own a stake in Wellington Airport. They also own a stake in Vodafone New Zealand and a lot of these renewable companies as well. And personally, I like Infratil, and I think Infratil has been such a core part of the NZX for such a long time. They've done really well. This is a fantastic management team. They charge a lot of fees as well, but they do deliver on returns. And I'm also really sad about this takeover offer, because I wanted to build this position up. I've talked about this in the past few months, since I added Infratil into the portfolio, that I was going to build this position up. And instead of having to buy it at $6, the share price is now over $7, currently at $7.50 this morning. So untimely for me personally. Am I going to build up this position as I wanted to in the previous month? Probably not, okay? Just because the share price has already gone up 20-30% since I first bought in. But that doesn't mean I won't continue buying Infratil stock. I just won't increase the allocation that I have within my portfolio. So that is where I stand with Infratil at the moment. In terms of my strategy going forward into 2021, as far as this portfolio goes, now I will continue to dollar cost average into this portfolio. Nothing has changed about that. I will take a more individual stock approach to this portfolio, so I won't buy into diversified ETFs. I will buy more individual stocks, as I've mentioned in the past portfolio updates as well. So I've already built up my position in Oceania Healthcare and Heartland Group Holdings, and if I do see a stock that I want to add into this portfolio, my strategy is to convert some of the existing shares that I have within the same industry. I'll maybe reduce that position or sell down completely to buy that new position within the same industry. So for example, if I suddenly like Ryman Healthcare, what I'll do is I will sell down the Oceania Healthcare position and go into Ryman. That is my plan for 2021, my investing plan for 2021. Nothing has changed really, and I do think consistency is key in the markets, but continue to dollar cost average into strong companies, to good companies, into diversified ETFs if that is your cup of tea. and I think you should do well in 2021. So there you have it. This is the portfolio update for the end of December 2020. I hope you enjoyed this video, guys, and I am very excited for what 2021 has to offer. If you want to sign up with Sharesies, be sure to use that link down below. You get $5 when you sign up with Sharesies. I also get $5, which should help this channel continue to grow and continue to help me doing what I'm doing. Thank you for watching, and until next time, take care.